Wall Street's winning streak. The U.S. is dominating the global stock market performance calendar amid a streak of stock market highs. The S&P 500, the NASDAQ, ripping into new records last week, while the Dow remains in striking distance of its own all-time high. Joining us right now to look at the backdrop for investing, the economy, James Bullard is the president and the CEO of the St. Louis Federal Reserve. Good to see you, sir. Thanks so much for joining us.
Thanks for having me.
Characterize the backdrop for us in terms of economic success that we've seen.
Well, from a central bank's perspective, it doesn't get any better than this. You've got relatively rapid economic growth, considering the slow growth over this expansion. We're at about 3% year-over-year growth rate, low unemployment, good, strong labor markets, inflation just now right at target on the Fed's preferred measure. So I think we're in very good shape right now.
Yeah, I mean, when you look at 2 straight quarters of 4% growth, which was pretty incredible. Is that sustainable?
Well, most forecasts have this slowing down. They think the potential growth rate for the U.S. economy is slower, down around 2% or even less. So we're definitely growing above trend right now.
Let me ask you what could get in the way, because the Federal Reserve Bank of St. Louis recently published a study on how the trade dispute could sabotage this growth story here in the economy. Tell us about that.
Yeah, on trade, I would say it's important to get to some deals somewhere to reduce the uncertainty in this topic, because you don't want to have perpetual uncertainty and perpetual chaos around possible trade relationships. So I thought this announcement of the Mexico deal was very important. If we can seal that deal and get it done, that will show that sometimes this does come to a resolution at some point, and that will reduce the uncertainty and give investors more confidence, I think.
Yeah, it's interesting, because while this whole trade uncertainty has been going on, the markets, I feel like, have given this administration the benefit of the doubt, and not because the markets would be much lower if people really thought that we were in this massive trade war. But we're still waiting on these uncertainties. I mean, we could see additional tariffs go on China this Thursday. How worried are you about the U.S.-China relationship in that regard?
Yeah, in China, I'm not seeing as much progress being made. Both sides, you know, I suppose it's shadow boxing at this point, but I just don't see much happening there, and the Chinese might have different attitude about what they need to do.
So you think the Mexico deal was optimistic, but you're still waiting on Canada, of course.
Yeah, they've got. I don't know how that's going to turn out this week. Obviously, the deal seems pretty close. Then you've got, you know, parliamentary approval and things like that. So there's further to go, but to reach an initial deal would be important.
Let's talk jobs, James, because one of the issues was the fact that we've been waiting for wages to move for so long. Wages have moved, 2.9% growth year over year, and yet now there's a lot of outcry about, now things are getting overheated and the Federal Reserve should not raise interest rates too much. What's your take on where we are in terms of wages and the strength of the jobs market?
Yeah, the employment cost index is up about 2.9% year over year. That's not a great number compared to past expansions, but productivity growth has been low and inflation's about at 2%. So if you think productivity growth is about 1% on average and inflation's at 2%, that adds up to 3%. That should be where wages are. We're pretty close to that. So I would say something more like steady state wages and wage growth instead of above average wage growth right now, anyway.
Well, how do you ensure that the Fed does sort of balance out strength that we're seeing but not overdo it? Because I know we're in an unprecedented period right now where the Federal Reserve has to unwind the $4.5 trillion balance sheet at the same time of raising interest rates coming out from zero coming up. So how do you balance that? Tell us what's most important.
Here's how I think you should think about the Fed. We've already been preemptive. We raised rates while the inflation rate was below our target. We started shrinking the size of the balance sheet before inflation came up to target. So we've done these things over the last 2 years. Now we're in pretty good shape. And I think what we could do is take signals from financial markets that are telling us that we're about where we need to be right now. Yield curve, for instance, is very flat. I'd rather not see an inverted yield curve in the U.S. That's usually a harbinger of slowdown ahead. And inflation expectations based on market-based measures are low and remain right around our target. I think it shows that we've got a pretty good policy right now, and we should stay where we are and see how the data come in.
So do you worry that the Fed could overdo it in terms of too many rate hikes?
Yeah, I've been concerned about this because, our models say one thing, but our models are flawed, and then financial markets are saying something else, especially through the yield curve.
So tell us where you see the growth in the economy today. I mean, you've got a very good unemployment number at 3.9%. You've got a very good GDP number, and we know that job creation has happened steadily. Are there areas of the economy that you see growing faster than others?
Well, the tech sector continues to power the U.S. economy, and I think a great question for investors, and I don't have an answer this morning, but, how far can we go in valuing these companies? Are they really going to dominate the entire economy, or is there going to be some limit to what they can do? And I think everyone's kind of scratching their head about that. These are really a long winning streak for these companies.
No, you're right, because technology has changed virtually every industry, from healthcare to automotive. You're seeing
every CEO I talk to is worried about getting disrupted, especially by Amazon.
And what would that mean for the growth story of the economy, the disruption part of it?
Well, you could take an optimistic view and say, well, that's keeping people on their toes, and they're thinking more about how to use information technology to improve their businesses. That's one way to look at it. Another way to look at it is maybe they're running scared and they're trying to get shorter-term profits while they can.